So you clicked on this video because you need an intraday scalping trading strategy. Well, luckily for you, I'm about to teach you my absolute favorite intraday trading strategy. It's my favorite because it's so simple, and the simpler it is, the more repeatable it is. A lot of people in this industry will look for the fancy stuff and the hard stuff instead of focusing on simplicity and repeatability. These two factors go very well together, and it should be the top priority for any intraday trader. This strategy allows me to go break even on my position fast, which means that my psychology is always intact when I'm using this strategy, simply because the risk to reward is no longer an issue for me. A lot of people struggle with their risk to reward. They don't know which to choose. If they hold for too long, they get anxious. But by going break even and taking your first partial early and having a strategy that allows that simply gives you way more mental capacity, and I think this trading strategy will suit a lot of you guys. So without further ado, let's jump right onto the charts and take a look at the first example. So there are three primary components when it comes to this trading strategy, those being liquidity, market structure, and the Fibonacci extension tool. You do not need a whole lot more than that, and as I said, I want to keep it as simple as possible. So starting off here on the NASDAQ, what we see here is an obvious liquidity sweep, which we got right here. Now, after we got that liquidity sweep, we didn't really see a follow through to the downside. Now, what do I mean by follow through? Well, what I mean by follow through is, for example, right here, when this high got taken out, we most definitely have follow through to the upside, and that tells me that the order flow is bullish. So currently, when we have swept the high, we've had no trouble going higher, right? So in this current market, after we've swept the high, we have no trouble going higher, which again tells me that the market is bullish. However, when we sweep the lows, we do in fact have trouble going lower. Now, when I say go lower, I obviously mean lower with displacement. So for example, right here, we have a lot of displacement. Now, displacement is again just a fancier word for a move in the market with a lot of volume behind it. So for example, this entire move here is bullish displacement. We're not really getting that here when we sweep the low. After we swept this low, we got a bit of follow through and then a consolidation. So currently we're struggling to go lower after sweeping liquidity, and we also saw huge displacement to the upside following the liquidity sweep of this low. Now, the only reason why I am going to trust this displacement is simply because of the fact that we had a huge displacement over here as well that went beyond the highs. That tells me a lot about the direction of the market, and I therefore believe that the market is bullish. So what I'm going to do is, after my liquidity sweep, that's our first point, I wait for some sort of displacement or follow through to the upside, which we got right here. That is number two. Number three, I preferably want to get some sort of break of structure involved, and after that, I utilize my Fibonacci extension tool. I draw it from the low that swept liquidity to the most recent swing high. And my entry is always going to be the 0.618. My stop loss can go to the low or a little bit above the low. That does not really matter. All I want you to do is always include all three of these zones. Because again, price does have a chance at reversing here, here, or here. So we want to include all those three zones in our take profit. Now, we have analyzed the market and we figured out that it is bullish. We also need to have targets in place. So for example, we have a swing high here, and I can imagine that that has a lot of stop losses on it because it's a very, very obvious swing high. So all the people that try to short this consolidation as a consolidation breakout likely place their stop loss around here. That means we have a lot of orders around this high. Not only that, we also have equal highs, or actually triple equal highs up here. So that gives me a really good target for this trade. So that is exactly what I'm going to do. The trade is already playing out a little bit. We would have gotten filled with this very candle right there. And let's see. That would have taken us to the top. Now, something that I do and I recommend that you do is always move your stop loss to break even at a 1-to-1. So right there, we take our first partial. We maybe take 50% of the position off, depending on how much you want to take off. And then we let the rest run to what we call external highs or external lows. That is simply the highest or lowest point of the trading range that we are currently trading. And that would be these triple equal highs, which is also, again, a great target because it is triple equal highs. So we were confident about the market order flow being bullish. We got a liquidity sweep and then saw no follow through after the liquidity sweep. We then got a break of structure with bullish displacement, and then we took the trade long after we got a retracement into the 0.618 off the optimal trade entry. Now the settings are going to be right here, so I'll give you guys a moment to copy those. All right, you can pause the video and do exactly that. But that was the basis of this trade. Now, we did also have a lot of confluences for targets. Again, we had a very, very obvious swing high here, and then we had these triple equal highs here acting as a lot of liquidity. Now let me show you here the second example of this very same strategy. We use the exact same analogy. We find a high. What happened when we took out the liquidity resting above there? We got no follow through to the upside, right? What did we do instead? Well, we certainly got follow through to the downside looking at this displacement here. Not only that, we got a significant candle closure below this down close swing low, giving us that a breaker or mitigation block depending on how you look at it. So I'm pretty confident currently that the market is bearish because we are getting no follow through to the upside, but we are getting follow through to the downside after sweeping liquidity. So I am going to go ahead and use my optimal trade entry, again drawing it from the high that took liquidity to the most recent swing low. I'm going to enter off of the 0.618 and I'm going to put my stop close or at the high. My target is going to be these equal lows that we have right here. So again, having a target is really important in any trading strategy. You need to be able to know when you're going to get out and why you're going to get out before you put on the trade. Now, my reasoning for this take profit is simply because we have relative equal lows, which again means we have stop orders resting below here and we also have it resting below here. Equal lows and equal highs are generally way higher probability in terms of liquidity pools, so that is a valid target for me. So this is exactly what the trade would look like, and there you go. I'm very, very fast in and out of these trades, and again, at a 1-to-1, I'm going to go break even on the position and let the rest run. That way, I minimize my downside by going break even fast. At that point, it's basically a free trade, as some like to say. And my psychology is just overall way better. So if you're currently waiting too long to go break even, getting stopped out after being in profit for a long time, consider going break even at a 1-to-1. That is what I recommend everybody to do. It's a very easy rule of thumb. And again, for me, it just keeps my psychology in check, so it may help you as well. But again, same exact analogy used here. Looking at the market order flow, failing to go higher after sweeping the highs, not failing to go lower after sweeping the low. Then I am taking the optimal trade entry retracement down to an obvious target, right? So I could have targeted these lows down here or even further down if that's what I want to do. But again, I am perfectly fine with a 2.44 R position. Does a daily bias matter for this? Right now, I'm charting on a 2-minute chart. In my opinion, that does not really matter. This could be totally against the bias because even if we were bullish on a daily chart, that does not mean that we can't get a 64 tick down move within that daily uptrending market. Now we're looking here at the second example. Before we were charting on a futures chart, specifically the NASDAQ. This is on a forex chart. This is Euro USD. I understand a lot of you are trading forex, and yes, it also works perfectly fine on forex. This is the 5-minute chart on Euro USD. And what we end up seeing is we get a liquidity sweep. We get no follow through after the liquidity sweep. That is to the upside because we certainly got a follow through to the downside. Now we also got a break of structure right here or the break of structure up here, depending on how you look at it. We certainly got follow through even through the lows, and we obviously failed to get follow through to the upside after sweeping the highs. So I am therefore willing to trust that this optimal trade entry is going to hold. Not only that, but we also are supported by previous structure, the breaker block, the supply zone, whatever you want to call it. You can obviously combine this with other concepts as well. I believe in combining systems or combining models to make them higher probability. So if you're currently trading supply and demand, this right here very often includes a supply zone or a demand zone. So I am going to place my short at the 0.618. My stop goes to the high or a little bit below. I am in this trade going to target the external low, which is again the lowest point of the trading range. Now I'm going to utilize this low here as my partial point. Remember, my first partial is always going to be at a 1-to-1, and that is also my break even. My second partial point can be the other internal lows or internal highs. If you're confused on what that is, that's simply all the highs and lows that is in between the lowest point of the trading range and the highest point of the trading range. So let's see exactly what happens. Right there, we are filled on the position, and I am going to see exactly where our 1-to-1 is. So if I do this and I do this, this right here is exactly where we are going to go break even, and that would be right there. So that's our first partial secured and our break even hit. So we are going to move the stop loss to break even and then let the rest of the position run here. And as you can see, we just smash take profit absolutely beautiful. Now, every trade is obviously not going to look like the trades that I showcased you in this example. These are obviously cherry picked by me. This strategy can also lose just like anything else can. But again, once you learn how to analyze the market structure, simply looking at what we do we get any follow through after the liquidity sweep, or do we simply wick above and then get follow through to the downside? Do we successfully form these breaker structures that we see along the way here? And do we have targets in mind for when we are going to get out of the position? Those are the major components that is included in this trading system. Again, I use this intraday. I've showcased you 1 minute, 2 minute, and a 5 minute chart, but this also works on the higher time frame. I do also use the same analogies on the daily charts and whatnot to form a bias. You can also use it on an hourly chart, a 4-hour chart. Again, in trading, if something works on a 1 minute time frame, it also works on the daily time frame, the weekly time frame, and the monthly time frame. So do not worry too much about what works on each time frame. Simply focus on a system that you can simplify and repeat, which I believe you can with this very system. Now, it may not be completely mechanical, and that's fine, but it's repeatable. So again, thank you a lot for watching. I personally use this strategy intraday all the time, which is why I call it an intraday strategy, but obviously you can use it on the higher time frame if you are a swing trader yourself. So I really hope you enjoyed this video, and I hope that I learned you a few tips and tricks that you did not already know. And without further ado, thank you a lot for watching, and I'll see you in my next video.